I'm trying to take some deep breaths and slow down because I know I'm charged. So one is thank you everybody who's either watching this or attending today. My name is Brian Armstrong, and I'm involved with Strong Will Property Management, Strong Will Real Estate Team at Keller Williams Vermont, and the CEO of KW Vermont. We have today some great people from Kinney Insurance, as well as, Diana, you spoke about a month ago from your team, and I forget, is it the exact pronunciation of the exchange? But we've got some great
Excess Exchange.
Thank you. Angela, I can't stress enough. Thanks for all that you're doing. Your praises were sung again by a landlord yesterday for helping them get through the eviction process. And so for those who are listening, this sort of started with Mike, who I consider a good friend and a great insurance agent, talked with Diana at a company meeting at KW Vermont. I just realized in light of the floods, so many questions around insurance. What should we recommend to our tenants? What should we recommend to our clients? So that when it inevitably happens, we are better protected, not only to help our residents, but certainly to respect our own wealth building as well.
Right. Thank you, Brian, for that introduction. And I think, hindsight sort of is 2020, but I think we can expect to have more flood incidences like we did this summer. And so I think making sure everybody is as prepared as they can be, as protected as can be is very important. And so we have sort of the experts here with us today to talk about these things. And if you have questions as we go along, please put them down in the Q&A. We will monitor those as best as we can and try to work them into the presentation. So I think at this point, we will turn this over to our insurance folks, Diana Duke, Evan Forward, and Michael Hugart for a presentation about flood risk. So floor is yours.
Yeah, thank you very much, Angela and Brian. So I am Mike Hugart. I'm with Kinney Insurance, and I've been in the insurance industry now for about 17 and a half years, all the while writing flood insurance, either through Diana and her team or through carrier appointments through like NFIP, the National Flood Insurance Program. So my job is essentially to work with the clients that we work with that own the properties to navigate the coverage amounts that they need and advise them on coverages that are necessary. But the workload, if you will, falls back on our underwriting team, which is why we brought New England Excess Exchange and Diana and Evan into the fold here, because they are really the true pros in knowing what markets are available and what coverages and options are kind of coming to light and what's needed, new programs, if you will. But without further ado, as I said, I'm Michael, Kinney Insurance, but Diana and Evan, they're going to take this away with the flood risk seminar, and go ahead.
Thanks so much, Mike. I appreciate it. We're so happy to be here. I was looking to try to figure out how long we've actually worked with Kinney Insurance, and it's further back than our records go. So more than 10 years. But just a great agency to work with, and Mike in particular. I think in this environment right now, some people might have heard the term hard market, but in general, in this right now, where you have a lot of catastrophic events that is kind of affecting the capacity available for insurers to provide coverage, it's challenging, and for people to find the right coverage. And so in this kind of environment, the importance of an independent agent that can really pull together a solution that really makes sense is just more important than ever. So we're here. The real star of the show here is Diana. I maybe can get a producer credit, I suppose. I lead business development at New England Excess, and I'm just kind of here to try to support this event today. And
before you take back over, I can jump back in, so I'm not really last.
Okay.
But, yeah. We're going to just cover some quick. Do you want to is the slide presentation up, and hopefully everyone can see it?
Yes.
Me, Diana Duke, everyone's mentioned me ultimately, but I'm going to let Evan talk about New England Excess on the first slide after this, but just going to touch on some what I think are really important topics about flood, and a lot of people don't necessarily know kind of the nitty gritty of what that means. There's always been buzzwords. I mean, we're actually coming up, I think, on 50 years very soon where NFIP has been like flood. Most people only ever think of NFIP when they say flood. Oh, it's the government program, that's all I've got. And I'm definitely going to talk a little bit about that, but more appropriately talk about all the other options out there and how there's more and different, and who kind of needs flood and or should have flood, or why people might actually want flood, not just because the catastrophe happened this summer here in Vermont, but in general on a day-to-day basis, why you should protect your own assets, whatever they may be.
Great. All right. So that's a nice little overview of our agenda there. And we can probably add these slides afterwards as well for folks to refer back to. But I just wanted to briefly provide an overview of who we are at NE. You know, we're a property and casualty insurance wholesaler. We're locally based. We've been in I think initially started in Montpelier and moved out to Barrie earlier on. I don't know how many years ago.
I think it's 11 now.
11 years. Founded by Ralph and Marie Scharschmidt, just kind of really were pioneers in really finding, you know, being able to provide coverage to people in rural areas where it was harder to find. And, you know, that kind of enables communities to grow. So anyway, we have that history, more than 40 years of it. Our focus is on hard to place risks. You know, we're specialists in the areas that we provide coverage for. We're a broker, a broker where we kind of fit our position is between our retail insurance agent partners, like Kinney Insurance, our carriers, and our employees. This is I wanted to just throw our mission on here just to kind of understand kind of how we kind of think about it. It's more like our philosophy, I think, as an organization is around mutual benefit and how we can find win-win solutions with all parties involved. And I just wanted to, you know, I actually had a couple of things I was going to introduce Diana about as well. You
want to tell, he's going to tell you things about me, which you may or may not want to know. All right, but be fast about it.
Okay.
I'm ready to talk flood.
Oh, well, okay. Diana's super excited to talk flood, but, you know, she comes from a background to work at PricewaterhouseCoopers, auditing life and health and captive insurance. She's really built our flood program up. You know, it's been around for longer than the past 6 years, but that's when really she took the reins and it really expanded the options we have available. So, but, you know, I won't close. I encourage you to go to ne.com if you want to learn more about us. All of our contact information is on there. But that being said, really who you want to engage with is, you know, Michael is just a fantastic agent. Work with your agent. I was thinking about this metaphor. We're like a galaxy in Michael's universe. You know, we have, you know, we do a fair amount of place insurance for landlords and related, but mostly in specialty areas, in unique situations, new ventures and so forth, and different niches. Michael has, you know, options for all of the different situations.
And he can reach me day or night. He knows how.
So he knows how to get in touch. So we're going to pass it off. Communication there. So anyway, without further ado, I'm really excited to hear Diana talk, as I always am. And I'm just going to flip through slides here. That's my role from here.
Yes, thank you.
Okay, thanks.
So one of the most important things I think about flood, when people think flood, they think the ocean coming into your house. That's really not it. In a broad way to look at flood, basically anywhere at any time when any surface water builds up in a place where it really shouldn't be or typically isn't. So for me, this field behind us, there's water in this field, we have a problem. But this field has flooded before and we're actually up at the top of a hill and it's not normal. So that would be considered a flood. There's just nothing out there. But in insurance speak, it really depends on the definition of the policy you have. And there's so many policies and they all differ pretty much a lot. So I have a few thrown up here and I won't bother to read them all, but the most important thing you can do when you have a flood policy is know the definition of it. There are some subtle differences, there are some not so subtle differences, and then there's some extra wording depending on which carrier you have. Ultimately though, a certain area and a certain number of people need to be impacted for your flood policy to actually help you. And that scares people, it worries people, but I can say similarly with this field out back, if this field floods, my neighbor's field is flooding too because he's downhill from us. So I would encourage people to take that out of your mind, that your policy may not cover you because both you and your neighbor don't both have a policy or whatever reason, because that's typically not the case. Now, probably the most important, who needs it? So I can tell you, we're here with Landlord. So if you own the building and you rent it out to others, or if you own the building and you work in the building, or your business is in it, or you have a condo or a condo association, or you're a unit owner or residential, and even as renters. Overall, if you have any real property at all, be it your building or your personal contents, the only way you're going to guarantee its protection is to have insurance. Most people have their property and or their general liability or tenants or homeowners coverage, but none of those policies actually cover flood. So if you want protection from flood, which we know has happened here, it is happening all over the world way more frequently, the only way to get that guarantee is with getting a flood policy. So another big deal, and this has changed and has been evolving for quite some time. NFIP themselves, it was them that came up with these designated flood zones, kind of deciding where high hazard flood is so that they could give us the NFIP flood program. Today versus 50 years ago, the thought process is a lot different. I just wanted to kind of break these out and then also kind of explain how private flood looks at these and what that means. So you have your what they call low hazard or 1 in 100 years or 1 in 500 year flood risk zones. That's what NFIP considers their lowest hazard. They only map these zones and the other two. And if you're not in a map zone, it doesn't mean you don't have a flood risk. It just means they don't have data to support that there's been flooding there. So these X zones, lowest hazard, these are the zones where a lender might not require you to get flood insurance, but it doesn't mean you don't have a risk. I wanted to just bring some facts in. So this doesn't include the most recent problems that we've had this summer, but in Vermont, just as of last June, about 36% of the NFIP's flood claims were actually in X zones. So what that means is $16 million of claims were paid out on the policies that existed. But as you might imagine, there was a whole boatload of people that didn't even have flood coverage because it wasn't required of them, and they felt secure in this low hazard area. But if 16 million is paid out on the policies that did exist, I can only imagine and extrapolate from there that there was probably another good 16 at least million for people that had no coverage at all in these zones. The next one would be, we call this the high inland zone, but it's also their middle zone. Basically, you're at moderate risk. So that's the A with any number, so A1, A2, or A with any letter, AE, AO, AR. It's the entire alphabet. I won't waste time telling you all of them, but anything that starts with A would fall in this category. These are typically areas around a river, a lake, a pond, areas where water is known to accumulate, or what I call in like when I'm reviewing a risk, puddles. So if you're at the bottom of 5 hills, that's a puddle. So your house is in an A zone because everybody's water can come to your house. So NFIP, this is the level where the bank and the lender would require you to have it if you're in one of these zones, because they feel that these can happen every year, 1 in 5 years, 1 in 10 years. Like they can't guarantee one way or the other. They just know water is there and will always be there. So that's why a lender will require in this zone, but maybe not an X zone. So similarly, I wanted to just give some Vermont stats. About 63% of NFIP claims paid as of June last year. That was 50 million. So again, not everybody in these zones is required to get flood, because required typically involves the lender. Now their risk hasn't disappeared. If 63% means 50 million in payouts, you can imagine that all those people that don't have coverage because a lender didn't tell them they had to, at least that much in their own expense of it because they had no coverage. Now, the last zone doesn't typically apply to us, but with this current storm coming, it actually might, because the VE and the V zones are the velocity. That is typically coming from the coast. It's coming from the ocean. It's forced waves, it's tidal change, it's all of that. And it's NFIP's highest zone. And it's actually the widest zone, even though it doesn't feel that way. It goes in typically 20 to 40 miles along the entire coast, wherever you are. And now we live in New England, so we know that New York kind of has its own cut-in, New Jersey has its own little small islands and cut-ins. So like it goes that far. I believe Hurricane Lee right now is predicted to be 200 miles inland, meaning that's how far any of that tidal water could be pushed. So in this zone, it's the highest rated for NFIP, typically is also in private. But we don't have any claims for VE zones in Vermont because we don't actually have any coastal exposure here. But I didn't end up putting it on the slide here, but if we take New Hampshire, which only has, on the map, it looks like about an inch long of a coastal exposure, their VE exposure just as of June last year was a little over 19 million. And that's a very small piece compared to states like New Jersey, where the whole state is, where they have hundreds and hundreds of millions of claims from these zones. So my point in expressing this, and the part where private comes in, a zone is an arbitrary line that the government thought of 50 years ago. Now, they have remapped many times in many places, but not everywhere. Myself this summer, I was flooded, and I live in Williamstown, Vermont. I'm in an X zone. Now, they know water could come there, which is fine. However, if it rains at your house, you can actually flood. So whether you are designated a zone of any of these, if it can rain, it can flood. Whether you're on the top of a hill, the bottom of a hill, alone on a flat street, water doesn't care. It doesn't care that the government decided all this years ago that this is the spot on the map that is, and these aren't. That never is how it goes. That's why there's always outside of these zones, if you add up these percentages, it doesn't fully equal 100 because there's ones outside of these. So it's spread even further than what they think is a flood zone. When we look at a risk, and when you think about your own risk, whether it's a zone or not, do you want your property to be safe? And if it rains at your house, you can flood. Does it mean you need the Cadillac of policies? Maybe not. But if you have no coverage, you have no coverage and you have no protection kind of for that property. So we don't think in zones anymore. We think, where are you and how much rain do you get every year? And how much might you be predicted to get rain in the future?
Dan, if I may interrupt for a second, we've already had one great question, which I think actually pertains pretty much to the slides or what you're talking about now. And thank you for the individual who posted this. With the higher levels of flooding that are not on standard flood maps, the flood maps Vermont had, with the flooding we had in July, where are we in terms of real estate being sold now? What, at least were real estate that was on the edge of flooding. So I interpret that, and please type to the question that the person asked if I'm getting this wrong. How is that changing now for anything that you're seeing from real estate transactions on properties that were near flooding or in flooded areas that weren't on zones? Are you seeing that creating insurance issues? Are they reevaluating the maps?
That's a great question. So I talked about me being from Williamstown and that I'm in an X zone. Because enough of us were impacted, we are forcing FEMA to come and remap. And I'm sad to tell you that the maps that were in existence or in effect for me for this storm were last touched on in 1988. Nobody came back and remapped, but this river or brook, well, it's a river now, it was a brook when, wasn't even on that 1988 map that's behind my house. As we all know, that I hate this word, topography changes every day. Every time it rains, things move. So I can say since this storm this summer, I am seeing so many more submissions for people either in a non-participating community for NFIP or in X zones, actually. So that fringe stuff now, when it comes to buying or selling, a lot of the submissions I see are new purchases. They're asking either the seller or the buyer to investigate flood insurance, regardless of whether it's required now. I suspect we're going to see a lot of towns remapped here in Vermont. I know my community has pushed for that. That could take 3 to 5 years. Like it's with NFIP, it's a slow process. But other carriers that like I use here have already started to update their own mapping based on the details that kind of came out of this storm. So the government does take it a little slower. We understand it's a big place to kind of make these changes, but I think it was similar 2 years ago in upstate New York. Their community hadn't been reevaluated in at least 30 years. And then they had a big storm come through. I think it was Ian at the time. I think that's the name. And they are forcing NFIP to come and remap. So in regards to like buying and selling and, just owning in general, people that were on the cusp before, I think you can push it back now, like a good 40 miles out. So if you were just on the edge, I would encourage you to take that 40 because you might be in the middle of trying to buy it and that map comes out and it'll be at your closing. They say, oh, sorry, you're actually in a required one. If you didn't already do it, obviously my goal is if you're buying something, get some flood coverage no matter what, but it'll be those instances that like people are already running into that. Williamstown is considered, it's not under emergency, but it still is because it's an active flood zone. They haven't closed our community out. So trying to buy something in Williamstown right now, everyone is being tacked with, you need a flood policy just in case, because we don't know how the map's going to change now.
Well, and
Yeah.
I think, Brian, the second part to that question is where are those real estate transactions going to land in terms of disclosures by sellers of what they've seen and what they've experienced, regardless of sort of what the map says, right? Because I think you may be looking at some new disclosure requirements, given that so many properties were not in a flood zone or a targeted flood zone and people didn't have insurance.
So the real piece of that, and it's going to be any building or home that requested disaster assistance, if they accept any monies from the government from that portion, that building for the life of its existence is now required to have flood insurance, no matter what zone it's in. So you will very much likely start seeing that. I think back to Sandy, people didn't want to say if they had a flood or not, because they're trying to get out of their house, if it wasn't obvious, or maybe they weren't, but all their neighbors were. I think the legalese, and I will leave that to the actual lawyers, but I know that there was 1-page disclosures like handed out in every property, but in New Jersey, every home is required to have an elevation certificate updated every couple years. So we might start seeing that here in Vermont. There's no way for me to guarantee that, of course, but I suspect more people will be asking. And it's not something necessarily like I'm going to know or even Mike would know, but your lender is going to run comparing to like when the lender does the review to sell a home and they do that flood kind of review, it's going to ding for them that this property accepted FEMA money. So they're going to say, it doesn't matter that you're in an X zone, we're going to have to require it now. So I imagine lenders too, here and across other states that this has happened, are going to definitely need some kind of a disclosure in there or an extra piece of paper to give you a little more detail. I don't know if I answered that in whole or not, but.
Yeah, I was going to interject though too. One of the other items that we've been seeing too on our end is that some more savvy realtors are starting to touch base with us as well, just to get an idea of what the flood cost and what zone or mapping that particular property are in prior to them taking the listings. So it just kind of gives like a lot of people a little bit added focus and attention. So, buyers who are coming in to potentially look at a new property, they're getting that information up front. And then the other thing I was going to interject too is we even saw in Cabot where, and I think this was on the news within that period of time too, back in July, but entire section of the river diverted and created itself a whole new path. And that came right underneath a property's basement. So a lot of these things are just changing and evolving as we see it. And, I think Diana's right. You're going to start seeing some significant changes come down the pipe.
Mike, have you seen any changes and I want to make the flow of the presentation because Diana, your information is extremely valuable. Have you seen any change in your customers' habits? Like I'm thinking 3-4 years ago, fortunate I've had a couple buildings paid off, had them for a long time. I'd be like, hey, I don't need that insurance. These days, I think I'd be like, well, it's paid off. And so what should I have?
No, it's a great question. And frankly, we're seeing a lot more of that where people are just being more savvy buyers and property owners.
Good.
So they're certainly looking at things a little bit differently. Whereas like I used to see people, like I said, I was 17 years in now. So we used to see a lot of people just basically try to get the least amount of coverage that they possibly could. And that whole dynamic has changed where people are just really focused on making sure they have the right amount of coverage for the property. And being that, they're also asking those prevalent questions of, is this in a flood zone? Should I need it? And we're getting a lot more quotes on just X zones right now, which are not required, as she said. But we're getting a lot more quotes and just presenting those things along with our property insurances, just so people just understand the full gamut of what coverage are available, and they can make the more educated decision, especially in light of history is repeating itself.
Should we?
I'm happy to keep going unless somebody's got, I
Any
love
other-
questions, so I'm all about the on the fly part.
Yeah.
Keeps my brain good. So that kind of does, you just touched on that, bringing on the coverages. How much do you need? How much should I get? Do I need it? Do I don't need it? If it rains at your house, you should get insurance. If you want your property to be protected, you should get flood insurance. It's really that simple, regardless of zone, but there are a variety of coverages available. NFIP, the government's program, offers building and contents for business or personal. They also do like condo associations and tenant only. So if you're a tenant, they will do just a contents policy for you. There is absolutely nothing wrong with that. But if you step back, with private flood, they actually have so many more options, more a la carte, more flexibility in what you can get. So with private, you could also do loss of use. So for me, I was out of my house for 14 days. The loss of use coverage would have been really great. I could have found a place to rent or stay or kind of take care of that. Similarly, if I had a commercial building, like as a landlord, if your tenants can't live there and they can't pay you rent, where's your coverage? So that would be business income. And it ranges from, let's say you only had 20,000 a year from this one unit. That's the one you think is exposed. Sure. But you get 100,000 in rent annually. You can actually get that much. So it just protects you in the event that your tenants can't live there or they can't pay you and a flood kind of took out part of your building. Similarly, if you don't own a building, but you're renting it as a renter or as a commercial renter, and you need to make certain improvements inside for you to be able to do what you do. So if, let's say I had to turn this space right here, I don't own it, but I'm renting it and I want to turn it into a store and I have to build in shelves and cabinets and change the electrical. The improvements or betterments part comes into play there. So your portion of what you've done to the building can be protected for you. And in these other ones, like lava overflow and earthquake, you'd think we don't see that a lot here in Vermont, but we've actually had 2 earthquakes this year, very teeny ones. But they happen. Whether they get bigger or not, I don't know, but these can kind of flow in with your flood coverage because some policies offer earthquake and flood all together. Lava, I hope we never have that problem, but again, it can come out wherever it wants. And I've seen too many movies to know that it could happen in places like Vermont, just like it could happen in California or New York City.
Yeah, I'd love to add in, and you may have been leaning towards touching on this anyway, but if you're a landlord or property owner that's renting out your building right now and you have flood insurance, make sure you know which policy you have, whether it be NFIP, which is just building and contents, or if it's a private flood option, because that's where that business income comes into play. And we are seeing more and more often, or at least we had in the past, when a lender requires the coverage, they don't necessarily care about your loss of rents portion. They want to make sure that building's covered. So the loss of rents only really comes from a private flood option, which is what we gain access to through companies like New England Excess.
That's huge. And Angela, this may be something for you to weigh on. If my property is flooded, I still have an obligation as a landlord to provide housing for the people that have leased to me, correct?
Not necessarily.
Okay.
It depends on where you are, but through a significant portion of Vermont, the answer is no. But you're going to be hard pressed to ask somebody to pay you rent for a place that they cannot occupy. So it becomes sort of this balancing act of you can't be here, so we're going to abate rents, but if you're abating rents, then you don't have the cash flow coming in. And so these types of policies would alleviate that financial stress for the landlord, and I think make it easier to say tenants, you're don't have to pay rent while you're not here.
I call it CYB coverage, cover your butt. And that's the most colorful word I will use. I apologize, but that's really it. We all want to think that even if the worst happens, that our tenants could, but I can assure you, I can look at Montpelier, I can look here in Barrie and tell you that that was not the case. A lot of the places, because they had flood policies that were private and included that business income, and their people couldn't come back into their homes because it took however many months to get it fixed up. That was their saving grace, because that money on a private flood claim is one of the first things to get paid. Like, they want to make sure you have the money you need to fix and do. So cover your butt, no matter what. Cover your butt. That's the good one. And then the last thing on here that is for private is basement contents. So NFIP policies are very strict and specific about what they will or won't cover in your basement. Most people don't think a lot about it if it's not finished, but there's actually a lot of things in most basements here in Vermont that affect your entire building. It's not just, the dusty basement that has your heater, water heater, air conditioning units, tenant stuff, your own stuff or storage for like your lawnmower, etc. Now,
many times your electrical panels are in your basement.
Yep, electric
Great point.
panels or any of that stuff that kind of leads to run every mechanical in the whole building. And sometimes it's 2 or 4 or 5, especially if it's a landlord situation where you have 5 apartments. Each one might have their own tank down there or their own furnace or anything like that, anything mechanical. Now, NFIP policies cover some of that, but they are very specific and strict. Now, there's so many flood policies out there that are private. If I tried to read you and tell you which ones did or didn't, we wouldn't have enough time. But there are carriers out there that will cover anything anything to do with your building or contents anywhere in the building. They don't care, as long as it stays in the building during a flood. So if some bulkhead doors opened and all the things leave, that's not going to work. So it has to stay in your building. Then there are other policies that will just cover your contents in your building wherever, and they don't speak about whether it leaves or not. Then there are others that only will cover these 40 things in your basement, others that you can buy back contents coverage or more broad coverage for more things that might be there. Typically, in any flood policy, anything that is attached to your building, that runs your building, or is mechanical to your building, is part of the building. The limitation comes that's where the money goes first. So if your basement that has your heating and air conditioning and water heaters and whatnot is all in the basement, but both your basement and your first floor were impacted, and you have just say $250,000 on a policy for your building, you're going to exhaust that money before you get to the first floor. So one of the newer questions that we've probably been asking about 2 years, when somebody says, I have a basement, I typically say, how much do you have down there? Like, in regards to what it is connected to your building and or you need to run your building. About how much do you think that is? I can tell you at my own house, I did not estimate correctly. It turned, what was 8,000 just 7 months before this flood was 14,000 now, because the price of everything has changed. But if they say to me, I've got about 20,000 of mechanicals down there, I encourage people to get a higher building limit by that much, at least. Because it's very quick how fast it exhausts in your basement. So if you had walls, they're going to fix that. Your electrical, everything that has to be rewired, your whole panel, your furnace, these things add up quickly and they will eat first, because that's the most, you can't have a building without those things. So typically that's where your money goes first. So your limit is limited to whatever you pick. So I just want to make sure I pointed out basement. I think Mike and I, we've probably shared a few of these now, but I encourage everyone to just know what is and isn't covered in a basement. I don't know many houses here in Vermont or buildings really that don't have one. Like I still have, it's a, I guess they call it a root cellar. That's what mine was before we kind of did some improvements, but something to think about. It's not an addition. it falls under that same limit because it's part of your building. The only way to really make sure you've got like enough is to kind of add that to what you think first floor and up is worth, I guess. Any questions on that part? Because I know that basement part is probably the worst part. Or the scariest it was. for
Probably
me.
scariest. I would say this is the scariest.
For sure, scariest. I definitely didn't think it through for my own self. So having been on both sides of the table now, it's a serious thought and consideration. So I always ask. So here are some of those differences kind of that I talked about, but kind of brought back more into focus. And I'm not saying private is better than NFIP. I am not. Any coverage is better than no coverage, no matter where you get it from, and no matter what anyone says. So NFIP kind of gives you box limits and amounts. You can buy 250 and 100K on a private building, or like a home, that's your max. If it's commercial, it's 500 and I think it's 250 now with contents for a commercial building. Like that's just their max limits. On the private side, typically these are going to be on replacement cost forms, and you can have coverage from I think as low as $10,000 all the way up to your full replacement cost value. There are carriers out there that will write $100 million buildings. It may not be cheap, but it can be done. Now, a lender is going to say, we only need this much because they want to make sure their loan's paid. With a private policy, we can make sure that they're paid and you're paid. Because just because they can walk away satisfied doesn't mean you would if your whole building was lost. And if your building's 2 million and you've only got 500K in coverage, only the lender is going to be happy or partially happy, depending on where your loan limit is. So keep in mind that if you need more or different, I write so many policies and I ask every year that I just need it for my loan limit. And, you know, they go down every year as you keep paying. But one of the ones I just did this morning, their loan is down to $36,000, but their building is worth $800,000. So if that building flooded, they will probably get a check for that 30 less their deductible, but that's it. So whether it was a whole total loss, even if the building got sucked off this earth, only the lender's happy. And then your own investment is just gone. Like there's no way for you to recoup that, because if you have insurance, you're not necessarily eligible for FEMA disaster assistance because you had coverage and you chose your own limit. So something to consider there is, what do you need and how much? How much of your property do you want to guarantee its safety? That's how I look at it now. Similar business and contents, and we talked about business income, loss of use, whether you can buy back those basement contents or not. Ultimately, I just want to stress there are options. So you're not stuck with just the government's NFIP program, which there is nothing wrong with it at all. It just has what it has. But in the private sector, because we do insurance for everything, like professional, casualty, regular property, like we do it. We've been doing this a long time. So probably for the last 15, 20 years, private insurance for flood has kind of adopted what we already know. Like we take into consideration, you're a business. If you can't run, who's going to cover that? That's why we have, pardon me, that's why we have business income. You own your house and you can't live in it for 2 weeks. That's why we have loss of use, to make sure that you can be whole and that you can kind of get your own coverage for yourself, you know, guaranteeing your own investment. So just know that there's options. Mike knows them all. I probably can help with anything on the back end, but every insurance agent should already know that NFIP is not your only option anymore. And depending on what you need and want, like there's a lot of choices out there. So explore them as much as you can.
And I just want to mention too that, you know, obviously we're specialists in private flood insurance, but if you go to Michael, you know, he can also look into what NFIP options are available as well. So, you know, he, as I said, we're a galaxy in his universe. You know, he also can evaluate and make sure that you come up with the best solution. But as we discussed, there's a lot of advantages to private flood as well. But just wanted to mention that.
So we talked earlier like about basements. So I wanted to make sure I pointed out, like, this is a difference. So a dwelling form versus a rethought form. Rethought is a private flood carrier. Certain policies kind of limit what and where. So I wanted to point out this is what they would cover in your basement. NFIP has air conditioners. You have a washer and dryer, your personal freezer. Now this is contents. So it's not talking about your water heater or any of that, because that's what we call building mechanicals. But then on the other side, you see they list out certain special limits, but they're open and broad. They're not going to close down the shop because you lost a box of memorabilia. If you can say you had 10,000 in contents, they're not going to pick through it with a fine-tooth comb and say, nope, we're not covering, this heirloom you did or didn't have. But the first one on this list to me, which I always think is funny, is they do limit special artwork to $2,500 if it's in certain places in your building, and they won't pay more. But if you, keep your Mona Lisa, art in your basement, you're kind of asking for not to get paid what it might be worth. So just keep that in mind. But I just wanted to point out that reading what you have and knowing what's out there, that's really how you can, decide for yourself. Like if you don't care and you don't have a basement, NFIP policy all the way, because none of that applies to you. But if you do have one, maybe you care more and need more or want more to have coverage that way. This is my second and least favorite, elevation certificates. Everyone has heard them. I think a few years back it was, if we get an elevation certificate, we might be able to remove you from a flood zone so you don't have to get required flood. Well, that is not the case anymore. NFIP, with their most recent changes, I think it was just October last year with their 2.0 updates, elevation certificates are no longer required by NFIP because they don't give you credit on them anymore. They don't care. They're kind of rating their own way right now. Now, they tell you where's your building, where all your mechanicals are. They kind of push that back to what's your flood risk, and they kind of give you those details to tell you, I'm negatively elevated, or I'm actually above the flood zone, so maybe I'm less at risk. But what they don't do is remove the risk either way. But in the private sector, if you have one or you got one, sometimes if it's a positive thing, it can reduce your premiums still on our end. If you got one and it was negative, it doesn't mean your premiums would go up on the private end. It just means it's more accurate details to really assess your actual risk instead of a guess. Every risk I get, these are an elevation certificate is an actual person at your house, your specific. All of the cool tools I have on my end are general. I'm looking at everyone. I think my smallest, it's like 100 square feet or something. Like the models that I use kind of can get that detailed down. But I would rather trust Steve, who was at your house, took your actual measurements and gave me something real versus the plane flyover or the data that we collect digitally, because maybe it's passe, but I would trust a human's determination versus AI pushing it. But every carrier uses their AI abilities because we are living in that tech age. But elevation certificates, even though not required by NFIP, so most people aren't getting them, still have their benefits. But I think it's the next slide, if you wouldn't mind, a little more. They do actually have a cost to the insured. Nobody does these for free, similar to like a property assessment or boundary lines finding, someone who would survey your property. It's similar in there, and the pricing can definitely range. So this summer's flooding was anywhere between like $300 to $700. I found here in Vermont. Since then, it's $1,000 to $2,000 in those same places. But their job is harder now. Because of this flooding, certain corner pins or certain cornerstones of a property and landmarkers don't exist anymore. I know we lost the 2 off the back of ours because ours were across this little brook and halfway up this bank, I guess you'd call it. They're all gone because they're part of the river now. So if we go get our house resurveyed, somebody's going to have to go there. And because it's in water, they're going to actually have to push it. And I'm sure there's cool legalese on how you can like eminent domain take some of that back, but things are lost. And we know the Vermont topography has changed already this year from all the rain, but certainly from that flooding. The other piece of these is they do need to be updated. So just like the 1988 map for my town in Williamstown, it probably was not accurate to 2023 summer at all, because so much has happened in those 40 years, basically. So if I got one today, and I would say 2 to 3, maybe 5 years, you're going to need another one if you want it to be more accurate. Like for me as an insurance person on this end, I'm not going to say, oh, this one's from 1975. I can't accept it. That's not how it works. It was still a real person there. We just have to kind of extrapolate from that How much has changed? Has this area seen 5 storms or no storms? What was the average rainfall in this area? And again, it goes pushing back to that AI, which we have really great tools and modeling and things that they can do, but it is nothing compared to Steve coming to your house again and saying, oh, you shifted, like, or you're a little further negative, or something happened, your risk went down. Like, it 100% would be better to have a person there than this kind of AI detail we have. But they do give you real-time, accurate data for just you, not you and your neighbor, just you. They'll help you better understand your own flood exposure based on real data, not the old maps that NFIP put out, because it's a real person at your house. And if they are favorable in the private side, they can lower your flood premiums without a doubt, along with any mitigation that you might have at your home, like lifted on piers, or you filled in your basement and don't have one, those kind of things.
You know, as far as I know, we've covered a lot about property owners, and I want to break up your mojo, in the presentation, because always I think it's extremely valuable. You know, anything that come to mind in addition to contents that, as landlords and rental property owners, that we should be promoting to our tenants either after these events or even just at lease signing to make sure we don't have to tell them the tough way that, yeah, we had an incident, but your stuff's not covered, because so many tenants don't know their stuff's not covered.
So again, I'm not on the legalese of this, but I know a couple of the people that that I know in my own community that are property managers now or landlords themselves. Their lease now includes a clause that they either have to accept getting their own contents flood policy, and they'll help connect them with someone to do it, or they have to sign a waiver saying they acknowledge that none of their stuff is covered. Like, a landlord can't get contents coverage for his tenants.
Right.
Because he doesn't own that property, he has no interest there. But that, I've definitely already started to see that, but it really depends on what you put in your lease. I would definitely encourage anyone renting. We encourage renters to get renter insurance, right? For their own property as it is, but this is just a secondary piece of that. So yeah, you're covered if it's a fire, but it could also flood here. And as the building owner, it would be your responsibility to tell tenants, my building is in a flood zone, or I know that this is my flood risk. So I don't know if they are legally responsible, but only the building owner is going to know that detail, definitely not a tenant. So communicating that is only going to help everyone.
That's your question, Brett?
Did I answer that?
It did.
All right, I already said this, basically everything up there too, so we'll skip that. Next one. So these are like the 3 takeaways, if nothing else. Flood insurance is not an extra expense of you buying something or owning something. It really isn't. It's just a guarantee on your investment, because rain is not something you can predict. It's not, we try, but even though, weatherman is never right, they don't ever have to be. That's the beauty of their job, right? We can't predict it. We try, and we will always be just a little bit off. We may get it right 1 time out of 20. It doesn't matter. But if you want to protect your own investment and your own stuff, you need the coverage. And it shouldn't be feeling to you like it's extra or it's difficult, because security to me doesn't feel that way. It's, okay, I'm good. I don't have to worry. I can sleep at night knowing that. But really, any coverage is better than no coverage. No coverage means you're on your own. It's your own dime. Second thing is, it won't happen to me really does often turn into, I can't believe it happened to me. I sell flood insurance. I was not in a flood zone. Guess what? It happened to me. And yes, so many things had to happen for my house to flood, but they actually all happened. I couldn't have even predicted the things, a camper and a trailer blocking a river, forcing water at my house, or a floodway giving way. I couldn't have predicted that even if I tried. But it's going to happen to you eventually. And that seems ominous and horrible, but it's going to happen. So just keep that in mind. I would hate for you to say, I wish it wasn't me, but it's probably going to someday be you. And then the last thing is, you have lots of options. And definitely it says on here to talk to your insurance agent, but you have options. You're only as closed off from those options as you kind of let yourself be. There's things you can definitely Google flood insurance and get crazy, but if you rely on someone like Mike or any other insurance agent, but they can help you. That's literally their job. And I'm on the back end to just help give them any more that I can.
Mike, do you have anything to add? because I know you're obviously talking with a lot of the property owners that Angela and I work with, as well as, the agents that, will watch these and so forth.
Yeah, I mean, I'll start with 71% of the earth is covered in water. So you need to make sure that you have the right coverage and the right agent advising you of those things, right? But I mean, realistically, Diana hit every note that I would go on. And I think I wrote you a really brief chat really quick, but when she was chatting about the coverages in private flood, I mean, it's real. I mean, if you are a landlord and you have property, in a private flood is by far probably the best option for you. Any coverage is great, right? But the private flood being that you can get the coverage for your loss of rents and such like that. Those are really the true things that we're looking at these days, especially for landlords, because I have a slew of them that they're buying properties, and realistically what we're buying is we're buying the income, right? They're annuitizing their investments and buying the income. So if that's what you want to protect, that private flood option has that income piece built in where you're protecting that risk. So, I'm available. Diana's obviously available through us, and possibly directly. I don't know about that, but we can answer any questions that anyone has, and give them the advice. And once they have the information, it's up to them to pull the next trigger.
You have to care more about your own stuff than we do, but we want you to protect your stuff. Like, that's the frank way to put it, I guess.
Yeah, for sure.
So I think, just chiming in here real quick, we've, spent some time talking about the landlord side of things, but what does adding, contents flood policy to a renter's policy, what is the cost? And it, it may depend on where the property is. But what does that look like for a tenant? Because a lot of them struggle. They can't afford to even buy basic renter's insurance policy. So, thinking you need to add this contents flood policy, what does that do to premium cost?
Well, I'll tell you on the renter's side of the house, right? So a renter's policy for personal property and liability. You're probably talking, ballpark starting around about $125 a year, thereabouts, right? So certainly affordable, around $10 to $12 a month. The flood policy would be a separate policy added on to that. But the contents only, I myself have not done a contents only policy for a tenant. But Diana, do you have any idea of where a minimum premium might lie?
It really does vary, because so someone on the first floor of a building is going to have a higher rate than someone on the second, third, fourth, and beyond, right? Because we expect water to rise. But depending on how much you want, and I'm just going to throw out, say, 50,000 in contents coverage, that can range from 260 to I think 800, depending on how close you are to, say, the river. But it really does just depend. That's similar. It costs a little more, but only because we're taking a different kind of risk. A tenant, if your house is going to catch fire, you have smoke alarms, you have fire protection sprinklers, stuff like that. With flood, we can't tell the problem. So it's a different kind of risk category, but they typically stay flat year over year. So I know some tenants' policies, I think they have like a general increase or whatever, but most flood contents only policies for residential or commercial tenants, either one, typically stay flat year over year. So
yeah, actually, that's a very a good thought that you just brought up there too. So you don't necessarily have just like your one-off tenants who are residential tenants. We're talking about business tenants who are leasing space. I had a number of properties down in the Barrie area who were in that same scenario. They weren't flooded, thank goodness for them, but their basements down below, where they had some contents anyway, limited, definitely was affected by the floodwaters.
Anything we haven't asked that we should be asking for our members' benefits?
I'm going to say, it really goes back. I know I've said it probably 20 times throughout this whole presentation. What's most important to you? Did you just invest $1 million in this 4-unit apartment building so you could have it for 5 minutes? Or is it for you to create your own and generate your own income in the long term? Like, what you value your stuff at is basically where you should be considering, not just flood, but do you have property? Do you have general liability? You know, all the other coverages and risks that kind of go with it. Like flood isn't an extra. It's kind of it's here and it's happening now. Storms are going to keep changing. I know Lee looks crazy, but right behind Lee was the other storm, like that they're mingling together out there, and storms are just happening over and over and over. And the timeline gets smaller. Like, it's up to you to gamble, for sure. It's yours. But for me and my perspective in like the world that I live in and having gone through what I did, it's how important and how valuable is it to me? And what do I want to make sure that I can walk away if I needed to, feeling secure? So for me, it's flood, fire, and liability, really. Like those are the three that always come to mind. I don't necessarily care about lava coverage, right? But depending on where you live, that actually might be more important than business income. Like if you're next to someplace where there's a fault line or whatever. But having your own idea of what is important to you. If you spend $1 million, I know I want my $1 million back. But not everybody feels that way, and that's okay. But for me, if I spend $1 million, I want to know that I've got some security in that.
You know, Brian, I'll add to that too, that you know, something that a lot of people never ask is and this is the case on the real estate side, as long as I know too, for sales and purchases. But as an agent, we don't charge you anything to get these quotes, right? So at any point in time, you can come to me, you can get a quote, you can get our advice. And realistically, what happens on our end, when we place the insurance for you, the carrier or the wholesaler in this case sends our agency a commission for doing business with them. So we don't actually charge our clients anything. So if you want to come to us and get an idea, often get yourself educated, you know, ask us for the insights, for the quote, for the information. It's not going to cost you anything to do so. So you might as well get the information, because when you're looking at buying a new property or investing in a new property, I should say, you're doing your due diligence. You're running the figures, you're running the rents, you're looking at what you can, you know, increase rents to over time, and you're doing the math, the calculations. You might as well get this additional piece of information of A, what flood zone is it in, and B, then what would it cost just to add that into the numbers as well, just to protect that risk.
Makes a lot of sense. Angela, before we wrap up for the day, anything that comes to mind from your perspective, or any general updates we should mention?
Probably not that I can do in 30 seconds or less, unfortunately. So it's been
need more coffee.
It's been a busy couple of months, 6-ish months. But I think what folks who belong to the association can start asking me for, or will be presented with, is some sort of flood addendum that they can have to make part of their lease, where they're advising tenants as to whether the property is flooded or not, and if it has, about this contents flood policy, and you know, reiterating to tenants that the landlord's policy does not cover their personal property and the contents in the unit, because that still is just an ongoing issue.
And that's one of my big takeaways. I'm going to ask that we look at our leases and our clients' leases and see if they're in there, and make sure that either they are or they're updated for renewals or for new tenants, so that we avoid that, while also providing great service to our residents to make sure they're aware of it as well.
Yep.
Well, I want to thank everybody for getting together today and talking about what I think is going to be a new normal in Vermont. It's just a question of where are you going to be part of the new normal, not if. And so with that being said, I'd like to thank a good friend and a great business partner, Michael Hugart, for all that you're doing to not only help our members, but to help me personally. Dan and Evan from New England Excess Exchange, get your name right this time. Thank you guys very much. And Angela, as always, appreciate your service on behalf of our clients, growing their service to the community through housing and wealth building for their families as well.
Thank you. And everybody come back and join us next month. We're going to be talking about investment options, how to invest, what tools are out there for you in terms of borrowing or leveraging equity that you already have. So.
Yeah, and on that comment right now, I got to say there's some pretty interesting opportunities out there. So I think that's going to be a real valuable session on how to structure it and make the opportunity that's out there. Guys, thank you everybody so much. I hope you have a great day and stay great.
Yeah, thanks for having us.
Thank you.
Okay.
Take care all.